Hello everybody. So today we're gonna talk about BPR. It's not gonna be long ass video, it's gonna be short, straight to the point. This is ICT concept. If anyone is new here, welcome to the ICT world. It might gonna be like a foreign language to you, but it is how I studied. It was not easy for me to, so I hope I will just try to clarify the concept. It's been very randomized in social media, the BPR, this that. So today we're gonna clarify the things that is related to BPR. It's really powerful PD array that Michael J. Huddleston gave to the community, and we're gonna talk about it today. So let's get into it. All right. So and if you study these till the end, I'll put the sauce right there at the end, and not really end, but in between the end. So you have to figure it out. You have to stick to the process, stick to the video, and just because I want you to study these, all right. Make sure that you have your coffee on your computer desk where you're studying. If it is on a phone, just make sure you're not distracted to other social media. Please turn it off and just stay focused and take notes. All right, that's I always prefer to my students as well, because these are the concept that seems very likely to each other, and you might get confused. And if you wish, you can do 2x speed on the YouTube so that it's gonna be quick rather than just sticking to the 1x of speed. It's up to you, all right, whatever makes you comfortable. So but let's get to the point. BPR, balanced price range. What is it? All right, what is it? The simple concept is in the name. All right, it's in the name, balanced price range. That means some price range that is fully balanced, that we don't want price to say or just say we want that price range to work as a support or resistance as per our bias. All right, for the BPR, my first rule is hunt for it. All right, BPR is something that should be in your chart way before price reaches to it. All right, it should be in your chart. Maybe it might gonna be from the 3 days ago, 2 days ago. You can also use IPDA. All right, as a date range. All right, so that you can exclude and include the BPR or any PD array, okay, that ICT has given. All right, look back 20, look back 60. You know that, I guess. If you don't know that, please go to Michael J. Huddleston YouTube channel and study that. All right, so let's get into this BPR. What is BPR? All right, so before going to the chart, let's go through these diagrams and be comfortable to go through this diagram very thoroughly, but make sure you understand it. All right, and you can take a screenshot and you can utilize these as your clarifying elements. All right, it's not a pattern. This all diagram is not a pattern. It is not. All right, it's a concept. It is concept based models. All right, so let's go to the first picture. All right, what do we have? I'm gonna clarify each element, and do not go with the diagram very strictly, but this is gonna be a narrative based. All right, so I'm gonna take you to top to bottom as a narrative basis. All right, so let's say you opened your chart, you saw a nice good looking equal highs. So what is equal high? One high over here, another high right here. So that means you have equal highs, two highs that is in the same price range and stopped and broke down. So let's just focus on this image now. Okay, so you have equal high. Okay, what do you have? You have equal high. Now this is a beginning. You saw equal high being created. Now your narrative starts from here. Oh, I have equal high up there. If you have equal high down there, it's going to be confusing. So you're going to ignore that narrative and you're going to pause and let market clarify the things. Okay, you're not going to say, hey, or maybe it's going to go first at this one and then the bottom one, or say, hey, it's going to rate to the bottom equal lows and then it's going to go to the high. No, you don't know shit. Okay, so you stop, watch it as market clarifies things through the time. So you wait. If there is confusion, you wait. Okay, you don't predict, you don't assume there. Okay, but if you have equal high and there is nothing to confuse you, then start narrating what is happening. Price went below, took this low. It's not a pattern. Okay, I'm just going through the narrative. This is how I build a narrative. So equal highs up there, came down, took this low. Okay, now what happened? It tries to went above but broke down, went above, down, up. So now when price left the range, now you can look to the bottom. Why? Because this is done. So anything below on the left side is not important now, because what is price doing? It went above, and now what's happening? Price is slowly coming down. Mark these words, slowly coming down. So what is slowly coming down? Price movement called. It's a low resistance liquidity run. If there is a low resistance between a price low to the high, low to the high, low to the high, if there is a, like say there is a resistance down here, there is a resistance up here, and if that is a low, that means it's not in a bigger range. But it is dropping, but it is not in a big range, it's in a small range. That means we have LR. What is LR? It's a low resistance liquidity run. All right, so repeat after me: low resistance liquidity run. Okay, it's a run of a liquidity. Where's the liquidity? Right here. It's a run of a liquidity, but in a low resistance manner. There is no high resistance. What high resistance would be, I have already explained it. All right, there will be like this. This is high resistance. What is low resistance? Low resistance is like this. Okay, something like this. So you will understand this when you see left side. All right, when you see beforehand price, what is doing it. Okay, so now narrative build up like this: equal highs, came down, took this liquidity, tried to went above, could not, came down, internal low been taken, now shifted to the upside. Does not matter if it is this or this. Okay, we are building the narrative. So it went above, came down, didn't touch this, and went above. What is this? Suppose this is a BPR. Hey, but what is BPR? Exactly. So now a question comes right here. BPR is a price range where you see two overlapping opposite fair value gaps. Okay, if there is a fair value gap on this leg, which is in a downtrend, and if there is a fair value gap on an uptrend, and that aligns together, like that overlaps each other. Okay, if that happens, that is BPR. That means the price range over there is balanced. Okay, this downtrend fair value gap is called, what is it? Let me color it differently so that you can check. Okay, so the orange one is a downtrend fair value gap, which is a CB. So this one is a CB. Sell side trend created a fair value gap. So CB, sell side imbalance, buy side inefficiency. What does that mean? Sell side is imbalanced, buy side is inefficient there. Okay, now when the uptrend happened, what happened over there? It created a BC, buy side imbalance, sell side inefficiency. All right, so there is a buy side of imbalance, there is imbalance on a buy side, but there is a sell side inefficient. That means there is no price that been transacted or say there is no movement of a sell side. So buy side imbalance in a sense, it created a displacement, it created a fair value gap, okay, on to the buy side. So buy side imbalance, sell side inefficient. Why sell side inefficient? Because sell side didn't happen, so there is no price that did this. Okay, if there would be this, there would already be sell side inefficient, I mean sell side efficient, okay, and that would not might create a fair value gap if it would be like this. So there would not be gap if there is a wick. Okay, I'm going to clarify this on a chart, but now let's focus thoroughly on these concepts, okay, about BC and CB getting overlapped. So suppose there is a overlap of fair value gap of CB and the BC, and that is what this price range is, this fair value gap. But this fair value gap is specifically called as BPR, balanced price range. So anything below is already balanced. That's what we consider, all right, because of this price move, now we have a balanced price range. So BPR is right over here. Now what happened? So narrative, equal highs, took this low, tried to go above, could not, came down, took this internal low. Now when price went above, you have fair value gap, CB and the BC, and that created BPR. Price came somewhere, let's say fair value gap, any fair value gap random, or say order block, whatever, and price went above and then slowly came down. And what happened is price reached to a 50% level of BPR. That's where you should be looking at. So no trade over here. You cannot trade, hey, price might gonna go to the BPR. No, you cannot use BPR as a target. BPR is a reversal model. All right, BPR is a beginning of a smart money reversal. BPR is a timed price range, okay, and BPR is a real support of a price, okay, and can be a resistance for the opposite bias, okay. So now when price came and tapped into a 50% level of BPR, what happens? You wait and watch how price reacts over there. If body respects 50% or the uppermost body of the fair value gap, and just the wick does the damage up to the 50% or maybe lower, that's fine. But the body should stay above 50% or above this high of the fair value gap, this BPR fair value gap, okay, this one. So if body stops right there or there, you are literally watching, and any fair value gap that creates it above as a displacement to go upside, now you can enter there as institutional order flow entry drill or something like this. Or if price comes down here, taps the 50% and body stays above 50% or the uppermost level of the BPR, and what happens is price does this, takes this low again with the wick, and body stays above. And now what happened? Just because of this, you have a breaker up here. So any breaker in a 5-minute, you extend that, any retracement to the breaker is boom. Okay, so this is sub model inside this structure. All right, this might be a structure or this might be a structure, or I showed you a institutional order flow enter drill. That means a displacement upside with a change in the delivery, you can enter anywhere. All right, so before entering there should be a narration. It's not a pattern, you need a narrative of drawn liquidity. Well, might be this is a smart money reversal range. Right here you see a smart money reversal. You can add whatever to this bias, okay, to this confirmation. SMT over here, fine, that's a cherry on top. take this as a relative equal low been taken out. You can take that as a part of narrative. You can take this as a turtle soup. All right, it's up to you. So now narrative come first, and BPR should be structured with the drawn liquidity. There should be a drawn liquidity, otherwise a BPR is nothing but just a piece of trash. All right, so now this low resistance liquidity is a sign or signature to you saying, hey, the left side after this, okay, after tapping into this with the precision that I showed you, or the narrative of footprint of smart money, body telling you a story, wick doing the damage. If that's happening here, then this low resistance liquidity gonna be telling you, hey, I came slowly to the downside. That means all the retailers been trapped out here. What's gonna happen now? It's gonna be a quick, so that they cannot take their positions out on a profit. It's gonna be quick. All right. And if you have a drawn liquidity very clear, perfect. You can take a minor buy side liquidity as your target. It's fine. But if there is an equal high, make sure you take that runner up to the equal highs. All right. Now, any questions to the image one, you can comment down saying, hey, image one, I have this question. I'm going to try to reply so that then I know what is image one, what is image two. All right. This is image one. Okay. I'm going to talk about this in the next image that I have. So for now, you can take the picture, this one, and if you do not understand, rewind it, go slow, take note, question me, send me message on my X, or send me or post it over there, hey, and tag me, hey, this. I'm gonna happy to quote that post. All right. Now next, right here, this one. Okay, let's see side by side and take screenshot whatever you can and see what's happening here. Okay, two different narration, two different structure, but I'm gonna tell you the story behind it. All right. Okay, now it will be on a side so that you can refer back and forth, but let's see here what's happening. Price came down, went above. Now there is a BPR, the fair value gap of sell side, fair value gap of buy side, CB, BC overlaps. You extend it to your right, that's a BPR. What happened? It went above, down, above. It created, or say it engineered a liquidity as equal high right there. For other retailers, what is it? It's a double top. They are short here. They shorted the market. Perfect. It came to a BPR. Now, if there is a trap of a retailer right here, what's going to happen? The BPR going to send the price to the upside. Came down, any BPR, any fair value gap, and that any fair value gap going to be a very precise. I'm going to tell you, okay? But for now, let's say any fair value gap, and then it pushed to the upside. It's going to be a quick, because retailers are trapped through the narrative, not the structure. The structure is high resistance. If there is a low resistance, that's a cherry on top. You take that shit. But if high resistance, or say there is no much of resistance and price is just smoothly going to downside, but there is a trap, that means it's going to be a quick. Or even if it is going to be slow, it's not going to be high resistance on this side. Okay, because if there is a high resistance on this side, these people will take out their positions, and that's not what smart money will give a chance to the retailers. All right. So now on this, what is necessary? Okay, if there is no much of left side telling your story except this drawn liquidity, what you do is you draw a quadrant from this to this that broke this short-term high. Okay, and there should be a fair value gap that comes to a discount and wait for the price to pierce down in the 50%. Okay, you want that. So you can take over here, or you can just take over here. But what's challenging, you want to see a footprint over here. So without footprint, you cannot enter at the 50%. There should be a footprint, there should be a change in delivery, there should be a displacement to the upside, and you want either institutional order flow entry rule method, or you use a breaker if there is any, or you will use this, which is price railing down to the discount before going any higher. All right. So BPR is not a entry to the midpoint, but BPR is a smart money reversal. Okay, where you start looking for the price to reverse if there is a narration already been created or engineered and been supporting your bias. All right. So this is pretty much. So add up to this, smart money reversal is a beginning of one curve after completing another curve. So market maker model, which is sell side been done at the BPR, because now smart money reversal happens. What can happen is SMT right here as well. There will be a cherry on top, it's fine. But what I'm saying is there will be a curve of market maker, first sell side and then the buy side, and you're gonna be on a buy side, and you have a draw equal highs up there, and you have a narration been built up. Okay, without narration, any PDA is just a piece of trash. All right, so now next here, this is gonna be a very important, and this is a sauce alert. All right, and if you studied this, please go to my X. I'll be posting this and answer me, okay, over there. I'll give you answer over here, but I want your answer on my comment section over there, so that I will say, hey, this guy's studying, and I'm gonna check you back. I'm gonna check on you, okay, and you're gonna tell me how is it working, and so that I'm gonna track you through the process of BPR. Okay, now over here, first one, say this orange box is a sell side imbalance, which is a CB. This blue box is a BC. Okay, it all overlaps. Yes, it does. But which one you extend, this one or this one? That's the question. Which one would you extend? That's the very question. Pause, think about it, answer yourself or answer me on the comment section before you resume now. Okay, the answer is, I don't know. Let's go over here. So this is CB. This is BC. Does it overlaps? Yes, it does. Which one you extend? This one or this one? Pretty good question. Hey, ICT Titan, what is the answer? Exactly. The answer is not in the public community of ICT traders. So the sauce is dropping now. Whichever is a smaller one, you're gonna take that and you extend and you delete rest. You delete this or this. Orange or blue? Exactly, orange. Which one you delete over here? Orange or blue? Exactly, orange. So now, whatever is a smaller one, you extend that. Doesn't matter if it is a CB or the BC. CB or the BC. Okay? You can extend the smaller one that overlaps. And that is your BPR. Okay? and then these narration gets built up. Then these narration gets built up. All right. Make sure you understood this one. If you didn't understood this one, comment down. Say, hey, ICT Titan, I did not understand this, because this is a sauce nobody knows. All right, until now, and you know now. Okay, let's move to the next. Pretty interesting, right? And pretty interesting, right? Let's go this one first. Take a screenshot, whatever you can, okay? And now let's go through this. Pretty simple. It's not going to be that difficult, all right? BPR, again, the concept is very pretty much same. This is the smaller one, okay? Let's suppose there was a small one on this side, bigger one this side. I took this one and extended all the way down to the right, okay? What happened? Price went above, came down, low resistance liquidity up, a little bit faster down, took this major sell side liquidity. This is the BPR, 50% body telling you a story. Whatever does the damage, does not matter. Displacement to the upside right here, comes down. Let's say this came to the 50%, or this is just an institutional order for entry. That is very quick one. Price tapped into it, rushed through it, because you have what? Equal highs been created over here. You have a major buy side liquidity. Price goes above, does not show you a pullback. You wait, price keeps going, price comes down, any fair value gap, watch if there is proportion block, if there is any order block on a higher time frame, 1 to 5 minute fair value gap. Read that. There should be a precision to the midpoint of that fair value gap to the upside down. The buy side been rated. Boom. Okay, this is a narration. What happened? Sell side been done. BPR, balanced price range. Support from the fair value gap, from the BPR. Now what's there as a hanging fruit, the easy equal highs, gets rated down. This is extra fruit, that is major buy side liquidity. There should be a strong narrative before going for this one, but this is easy. All right, let's move to this. Take a screenshot, whatever you can. Now this is gonna be a pretty specific narrative based, okay? Watch this. Now again, suppose this is a fair value gap BPR, which is a smaller one. Let's say this is from this side, this one. This might be a fair value gap from the rest of the people, but this, you know, bit overlap with this fair value gap over here, and this is a smaller one that you extended, and now that is a BPR, and that is not a simple fair value gap. That's a fucking BPR, balanced price range. Now what happened? Before coming to the balanced price range, to the BPR, and showing your footprint over here to the midpoint by staying its body above the midpoint and wick doing whatever the damage, does not matter. You don't enter here because you wait, okay? What happened? You see the narrative been built up or no? See, sales are taken? Yes. What's happening over here? This high and this high, relative equal high, not the equal high. I'm saying relatively equal high. That is a drawn liquidity. That means this is a double bottom. Okay, double top for the retailers. Again, it should not be equal. It's okay if it is not, and that cause we call it relative equal highs. And these people says, hey, we are safe because price just dropped. No, we are coming to break that down as a smart money with a reversal. Okay, now if there is a SMT over here, that's a cherry on top. If there is SMT over here, cherry on top. If both, fucking cherry on top. Up to you, okay? You track that down. But what is happening here, more than important, is look at this. The sell side was above this 50% level. What is this 50%? This red line. This is a quadrant from this low to this high. So what is this? You have 3 quadrants. You know that, right? 75%, 50%, 25%. From the low to the high, you project that, okay? You extend the low and the high, the Fibonacci. You use that, and what is happening? 75 is right here, 50 is right here, 25 is right here. Below 50 is discount. So whatever price down here is a discount. If price reaches to a discount, what is your initial bias? Your initial bias is going to be a to the upside. And if there is any drawn liquidity to the upside, that's fucking dope shit. All right. Now, what is creative engineer liquidity over here? See, this did not drop. Sorry, this candle did not drop over here. Okay, this one stayed above 50%. So that means price has not been to a discount. Price just stopped right here, and what is doing it? This is now a sell side liquidity, and look, when price did not go to a premium, discount, what happened? We know price is not going for this high because price has not tapped into discount. So what are you expecting? Any sign to the downside, to the discount. That's a cherry on top. So now what's happening? Price is accumulating, price manipulated to the upside, and by doing that, it engineered a relative equal highs. See the narration, okay? Accumulated, manipulated, and now distributed. But this can be a short option for you, but I'm telling you, if there is a BPI downside, that's not your drawn liquidity, okay? You can take that target up to this. It's fine. If you can do that, do it. I don't care. But we are talking about the BPR. So now, AMD. While doing D, that means distribution, it took this low. And by taking this low, that means sell side been raided, stops been raided, hunted, and it also dropped to the discount. And there is a fucking BPR, balanced fucking price range. Now what happened? Price went above. Anything you use, if there forms a breaker, do the breaker shit. If there forms a unicorn, do that shit. If there forms a institutional order flow entity, do that shit. But footprint is must. 50% of the BPR by the body telling you the story. Sometimes body can stop right over here. If that is, you wait for the more confirmations, okay? You don't just jump in, all right? And then you take these hanging fruits, relative equal highs as your target, boom, smash. Take this screenshot, study these, and nothing gonna beat these specific study model, all right? This is a study model. It's not a fucking pattern. And if there is anyone doing this shit for free, you capping me, bro. There is not. And now, if this helped you a little bit to your trading journey, comment down and DM me on an X, or you post it, you tag me, whatever you can. Just do it. I would be happy to reach out to you and say, hey, how is it doing? All right. Anything above? No. Pretty empty? Yes, I'm done my shit. All right. Take a screenshot if you want. Now, let's go to the chart. All right. Because this is where shit happens. All right. BPR cannot be a 1 minute BPR. Okay. You cannot use a 1 minute BPR. It must be above 15 minute. Okay, repeat after me. It must be above 15 minute. So anything less is not acceptable. You can go higher, it's fine, but less cannot be accepted. All right, so let's hunt for the BPR. Let's say your price is somewhere over here. Okay, let's say you have this price action already been printed. You don't have anything on your left side right here. You have this. Okay, this one. So look what's been built up over here. What do you see over here? Price just moving like a shit. Okay, but again, try to find BPR. Okay, where is BPR? Do you see right here? So you have this. You have this, and you have this. Okay, which one you take? See, this is pretty much same. Okay, pretty much same. You can use any, but because that not gonna be any different than each other. Okay, extend it. Now look this right over here on a lower time frame, let's say on a 5 minute. You can use that 1 minute, but I don't know if 1 minute gonna be shown or not on this. Okay, but for now, let's see here. You see this? What happened over here? Price came above, tapped to a 50%. Let's not focus right here over, okay? Just focus over here. What happened? Tapped to a 50%. Body is staying above, below the 50% of BPR, okay? Now, check if there is any narrative, if there is any drawn liquidity that have been supporting the price. Relative equal low? No, because this low been taken out right here. Pretty much not a relative equal low, okay? Pretty much not a relative equal low, but this one, look at this. You see this? Extend this. This one, right? So you have this. Now, you want what? A displacement, okay? Check if there is any displacement. Let's go to 1 minute. Because we have a drawn liquidity. I don't think it's gonna be, no. Let's go to 3 minutes. I don't see a data over there. Okay, now. Do you see any displacement? After tapping over here, you don't see any displacement, so you don't have entry. See? So that's why it's not been working. So BPR is not working is a wrong statement, but what is it? There is no BPR footprint. Okay, just 50% is not enough. Just botting staying below the 50% is not enough. You want what? A displacement. Okay, if there is no displacement, there is no trade. So this is cancelled. Let's go to 15-minute back. Okay, you can use above. You can use 30 minutes. You can use 1 hour. You can use whatever time frame above 15 minutes. All right. So right here, done. Okay, now where else you see a BPR? Is there a BPR? No, just this fair value gap. There is no fair value gap on this side, so no BPR. There is a fair value gap right over here. You have this fair value gap, this big one, right? So which one you use? You use this small one. Okay, extend it. No much of precision over there, so nothing. So cancel that. Now let's look at here. Is there any BPR on the downside? That is a bullish BPR. Okay, if there is any bullish BPR, you're gonna look for bullish one. So there is no fair value gap. There is fair value gap, but there is nothing on this side that overlaps this fair value gap. No fair value gap, so no BPR. No BPR. Over here, do you see BPR? Yes, you do. Where is it? This fair value gap, and there is this fair value gap, right? So which one you use? The smaller one. Delete this one. Did price reach up to there? No. Delete that. So whatever happened, nothing to worry. Where's another BPR? Is there a fair value gap right over here? Yes. Is there any fair value gap over here on this side? Yes. Which one? Exactly, brother. Exactly. This one. Look at over here. Why I chose this one? Because this overlaps with this CB. Look. You see this overlapped? Let me change the color. Okay. You see how it overlapped right over here? So if this overlaps and this is a bigger one, this is a smaller one, which one you use? Obviously smaller one. And we have this. Now 50% respect. Is there 50% respect? Not really. Where is it? Let's go to 5 minutes. Let's hunt it down. Okay, you You saw that on a 15-minute there's a respect of 50% of BPR. Let's check 5-minute if there is any. Woo, you see? Where is that? Right over here too. Right over here. Right over here. Body staying above. See? So now, can you enter? Let's say you want to enter after this. Like, hey, 50% been really respected right here. Yes, okay. Where's the fair value gap? This one. Right? So you're going to enter somewhere here. Right? Draw on liquidity. Is there a draw on liquidity? Just this? Or just check on your left. Is there anything? No. It's all-time high shit. Alright? So now, on this all-time high cases, it's going to be a tough. Okay? But if there is a narration, when this kind of news kind of happens, that means those are the target. Alright? That's unusual wicks, unusual candles, or liquidity, very manipulated liquidity. So that can be a target. All right, now look at here. If you would enter here, you would have stopped out. Whoops. Now what? Exactly, if price should just go above, this is the liquidity, but it didn't go above and just took you out. Now what? You wait. If this is your first time, you're gonna take on this one. It's fine. It's fine. Journal why it did not happen, and now you're gonna study that. Okay? Look at this. Price came down. There's a BPR started from here. Price came down above. So now what happened? BPR is a balanced price range. Okay? If that gets filled all the way to the down, that means that needs to be repriced. That needs to be repriced. How? Fully. Fully, not half. Fully. Alright? Why? Because of this. BPR means there should not be transaction to the downside. Okay? This is the sauce. Price, reprice is necessary. Okay? Price reprice necessary, but until when? Reprice, this is rebalanced, balanced price range been rebalanced. Now this needs to be repriced, but by the buy side candle. The wick of a green candle should be the priority. Okay, you're gonna be waiting for the wick that reprice the price range by the wick. Body needs to be telling you the story. Okay? So, after this, you want a displacement. Where is the displacement? This is the displacement. Okay? So, now this is the displacement, but you are looking at the 5-minute. You can go back and check lower time frame. Okay, for the institutional order of entry drill, what do we use? We use lower time frame. Okay, and we want that retracement. After this, boom. What do you see here? Fair value gap. Institutional order of entry drill right here. Okay, and then what do you have? Price been re-tapping to the same displacement fair value gap. Okay, so what it is doing, you see, price came down, repriced this, okay, went above this fair value gap, this fair value gap. You could have entered to this fair value gap, this one. If you would enter to this fair value gap, your stop loss is right over here. If you enter to this fair value gap, your stop is right over here. If you enter to this one, your stop is right over here. Okay? Because risk management is a skill to develop. You cannot enter randomly. Okay? If you enter, you risk likewise, because you can get taken out easily. All right? You could have taken out easily. Say this is perfect right over here. It's perfect. You could have entered right here. What would be your stop loss? It should not be this. Okay? Should be this. Okay? The lowest low. Again, if you see this as a displacement, you enter there, this is your lowest low now. Okay? Not this low or this low. Okay? You enter here, you cannot put your stop loss right here. You have to put your stop loss right here. If you enter here, you cannot put your stop loss below this fair value gap. No. At least below this. For the safest, this. Okay? And then see what happened. Boom. Straight to the target. Boom. Back to the high. Boom. Boom. Alright? I know. This one, how to take all this. This is a private mentorship shit that I do with my students. So let's not focus on that. This is very pretty much straightforward. Taking TP thing. So making money. Maybe you repeat this, right? Repeat this, you earn more. Alright? It should not be just this. Hey, I want this. No, it's not necessary. Alright? But anyways, let's go to another BPR. One last BPR. Alright? And then we are done. You are done with the BPR. Nobody knows this shit. Alright? Let's go to 15 minutes. Alright? Let's take a recent one. Say somewhere over here. Let's say over here. Alright? On 15 minutes, I see a very straightforward BPR right over here. If there is, check on a 15 minute. Fair value gap, fair value gap, fair value gap. Where is the fair value gap? One is right over here. Where's another one? One right here, another right here. Which one overlaps? This? Not really. This? Obviously. Which one you take? Smaller one. This does not overlaps. Okay? So delete these. And these you extend. And you extend. And you extend. Okay? Look at here. Any precision? Not really. Now. Hey, what about this? This fair value gap is right over here. And this is a common mistake. When you draw this fair value gap, I told you I'm going to tell you the sauce at the end. And this is the sauce. Okay? This fair value gap is a CB. There is a BC. Where is another BC? This BC. Right? But you have to extend this one because of the definition. And what is missing over here? Look. Do you see anything over here? And anything over here? What's the difference? A volume imbalance. So whenever there is a volume imbalance, what do? You extend. You take that gap. If you extend that, now look at this shit. This is overlapped. This is not your BPR. This is your BPR that comes first. If there is a buy side bias, price reaches to which one first? This one. Delete the bigger one. Boom. This. Extend it. Where's the precision? This one? Not really. Where the fuck is the exactly. Tapped. Boom. Then what happened? Check that shit. Let's go to 5 minutes and check if my shit is right or wrong. Whatever the story and whatever the damage does not make sense over here because the 50% is not been delivered where it did right here. If you can check this on a 1 minute, and if there is a precision on the 1 minute with the proper definition of a footprint, you take this shit right over here. Now check. 1 minute if you can. Let's go. Let's see if we can or not. Right here, 1 minute. Whoa ho ho. Ha ha ha. What's happening? Body telling you the story. Could not go below. Right? Exactly. On a 1 minute over here. Exactly at the 50%. How the buying and selling pressure working over here. Tell me that shit. Tell me that fucking shit. Indeed, there is no buying and selling pressure. Alright. Now, after this, what do you wait for? You wait for the displacement. Where's the displacement? Anywhere. No. Right over here? Type shit. How the fuck you know which fair value gap to use? This is how I know. My shit working. If you take this as institutional order flow entry drill, or right here, this fair value gap, if you use as an entry, where's your stop loss? Not here. Right here. The lowest low. Okay? If you have to enter here, you not go over leverage. Why? You know the shit is gonna be exploding. You go low leverage because you have what? Biggest stop loss. So you have to match that risk with the reward. Okay? God is not that giving. Okay? He is. If you do your thing correctly right over here, if you do your shit right here with the patience, with the time, with the magic. Ooh, am I telling something more? Private thing. Shh. Alright, anyways. BPR tapped. Displacement over here. Retracement. Boom. Perfect BPR. Boom. Now, if you taken this one, this would be a target, okay? Don't be too greedy. Check over here. What's happening over here? Do you see that shit? Or are you blind? I hope you're not blind. If you're not blind, you see this, sir. Sir, you see this? Easy target. Take entry over here. Maybe. Because you don't get entry over here. So, you maybe. Exactly right. You maybe. No. Fuck. No. Because, look at here. What happened? A bin. What? Look at this. Stay open. Took this slow. There is no requirement to go anything below this, because this liquidity has been taken out. This is a protected low. Now what happens? If this precision happens, you can enter anywhere. That means anywhere. Whatever presents it first. Whatever is the first thing. What is the first thing that you use as a PDRA? Order block. Right over here. Enter. Boom. 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 Sakalaka. Alright. Now, these equal highs, relative equal highs is your target. You take your exit over here. That's it. This is a private shit, brother. You cannot take this with me right now. You don't know how to take exit here. Yes, because this is a private shit. Alright, anyways, this is it for today. I hope I gave a lot. Rewind, revise, and that is it. Let me know if you want more. I have a lot to give. Alright, anyways, enjoy your shit. Bye. Good night. Titans, I'll see you next.